Do you know that most people associate the worsening COVID-19 situation with the stock market performance? And that is not correct. Don't try to predict the market. Don't try to anticipate, because COVID-19 situation is getting out of hand, the stock market is definitely going to become zero. That's not going to be the case. Remove that point of view, because today I'm going to share with you tips how you can really profit from this market crisis, how you can really double or triple your net worth. Because that's the journey I'm going on. I want you to be along with this journey. Now, to profit big, you of course need to invest big. Towards the end, I'll be showing you what I'm doing exactly, what kind of amounts I'm doing exactly, to give you some inspiration to become really aggressive with your plan moving forward. Not aggressively betting, but aggressive with your plan and executing it correctly. Now, this video is not going to be a stock tip, because in that case, I believe the best way to profit from this is through funds, through ETF, broad-based diversified investments. This video is not going to be a secret method, because the best way is dollar cost averaging and having an investment plan as to how you're going to enter the market strategically. Now, the best ideas are always plain and simple and obvious. Many times we ignore them. We think there's some fancy solution, some magic formula that can get you wealth. But wealth is patience. Wealth is doing things right over a long period of time. Hopefully that resonates with you. If you're not sure, write that down, jot that down so that it helps you in your journey. The first thing I'll bring up with today is overconfidence bias. This is very important. Do you realize that in my previous videos, like the Sheng Siong video, I've mentioned about their operational performance? Like the SIA video, I mentioned about their books. I've never mentioned where I think their investment trend is going, simply because when you are overconfident, you open yourself to making big bets and big mistakes. That is a mistake that I've made when I was much younger during global financial crisis. I bet on stocks big, but this time around, with the maturity, everything is broad-based, everything is diversified. So you're going in with a plan. Do that also. Don't have this overconfidence, because it gives you the false sense that you are superior, that you know what is going on. There's two kinds. If you are not sure what to do, you're not confident enough, look for me. Look for links below. I can help you get started. The one that I'm addressing is people who have done some research or are talking to people, looking for feeds. They become overconfident because they are researching and getting some basic information. They've not exactly studied on market trends. I have videos in this channel coming up on global financial crisis. I have videos in this channel to talk about, for example, the 9/11 crisis. So there are many crises I've covered before in this channel. Again, smash our subscribe button, get yourself well educated, because that's the best way to prevent yourself from making big, unnecessary, overconfident bets. Now, next thing to understand is researchers have looked at trading accounts before. I don't know if you've heard of this, but women are actually better traders than men. Let that sink in. That took me by shock when I first heard of it, and it sucks because I'm a guy. And women are better traders. And the simple fact is this: women are less susceptible to this overconfidence bias. They turn over their accounts about 50% of the time. Men turn over their accounts 85% of the time. They're trying to predict where the next big thing is, make a big bet. Remove that. That's going to get you into trouble. And if you haven't thought of that before, don't go there. Look to do steady, slow investing. Look for that video, dollar cost averaging. If you haven't seen it already, start with that video first, because that gives you a preliminary foundation. Today I'm talking about how to invest proper amounts. I'm thinking about psychology, how to really overcome this market crisis and to really look forward, have the right parameters. Markets are so fickle these days. One day they are going to say that some antiviral message is going to come about, that vaccine is going to come earlier. Markets are going to shoot up. One day they're going to say, there's a second wave of infection coming up. Market is going to crash now. Anticipate this kind of future circumstance, and you realize that you can't really predict where the market is going, where COVID-19 situation is turning. So once you understand that, you're a lot less confident and cautiously optimistic. That's the main thing. Younger guys have not thought through this thing about why are most people thinking that they are above average investors, when it's the same thing for driving. If you ask any driver, they'll be thinking they are above average drivers. But how can that be the case? That's the same logic. 85% of fund managers underperform an index. It's so difficult to even be an average investor, and it's even harder to become a above average investor. So if you've been thinking of that thing also, the best way, that's why, is to go into funds, is to go into ETFs, be broad-based, and really focus on your psychology, and really focus on investing proper amounts at strategic points, and really let time be the healer of this whole situation. Let's look at a few things. This over here is Hang Seng Index price. If you ask anyone where is it going next month, you will see a diverse answers. If you ask anyone where is it going in next year, you also see a diverse answer. But if you look, and if you ask anyone 5 years later, where will Hang Seng be, the unanimous answer will be higher. I can guarantee you that Most people are optimistic for long term, but in the near term, they're just guessing and they're just gambling. Remove that. If you focus 5 years, that's the main key. Write that down. If you focus on 5 years, you're going to win. If you focus on 1 year or 1 month, you're in trouble. You're just going to be so driven by news. You're going to stand too close to the picture to notice the real solution, to notice the real solution to getting you to profitability. Why did I bring up Hang Seng Index? Very simple. If you look at this chart over here, you realize that US equity is expensive. On the book value wise, this is factual. Whether it's going to trend upwards or not, we don't know. But from a book value perspective, Asian equities are cheaper. That's why I brought about Hang Seng. I'm investing myself 15,000 a month, 15,000 a month towards Asian equities. That's what I'm going towards. And you may be asking, 15,000 a month, are you going to stop after 2 months? Let me bring this up. If you look at in terms worst case situations, Dotcom bubble crash, it took 30 months to reach the bottom. Great Depression in 1929, it took 3 years to reach the bottom. That is how long I'm looking at to reach the bottom even. Beyond that, everything is sunshine. But if you're not ready for the worst case situation, you're in trouble because you're not going to anticipate problems down the road. And that's why I do a lot of personal coaching. If you are interested, look for links below. I'll be giving 3 months free in terms of personal coaching when it comes to managing your investment portfolio. And that's going to help you get started. That's going to make you profitable when you look 5 years down the road, 10 years down the road even. So with that, hope this message helps you. Smash on subscribe button and click on like button so that YouTube algorithm knows this message is important and feeds this to more people so that they become more financially savvy. So with that, I'll sign off. Take care and goodbye. If you're looking to get invested, look for links below. I'll be giving you 3 months free in terms of investment management. With that, you get a portfolio that's diversified. With that, you get management and active communication as to what to do with your investments to get to your financial goals. Look for links below. I'll see you there.